Hi students, let us start today's concept number 9 relating to PDD, provision for doubtful debt, or RDD, reserve for doubtful debt, or RBDD, reserve for bad and doubtful debt. Let us start. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two partners, Mr. A and Mr. B. Sharing profits and losses in the ratio of 2:2. What is the profit sharing ratio? 2:2. Their balance sheet as on 31st/3/2024 was as follows. Was word is used. It means that this is old balance sheet. Balance sheet as at 31st/3/2024. Capital and liabilities, amount rupees. Assets, amount rupees. Draw the format like this. Pause the video and draw the format like this. Are you ready? Capitals, Mr. A, Mr. B. Debtors, inner column 20,000 means gross debtors 20,000 less PDD. This is in the question means old PDD 1,000. So out of the 20,000 we are suspecting 1,000. It may or may not recovered. So net amount is 19,000. We may recover at the last we may recover 19,000. On 1/4/2024, Mr. C is admitted into partnership on the following terms. Now this question is relating to admission of a partner because the word used is admitted. Who are the old partners? Mr. A and Mr. B. What is the old profit sharing ratio? OPSR 2:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into the partnership firm on 1/4/2024. Who is the new partner? Mr. C. Adjustments. Decrease the provision for doubtful debts on debtors by rupees 200. The word used is by, means from 1,000 you deduct 200. So it means that there is a decrease in the PDD. Show how do you treat the PDD. They are asking you the treatment of the PDD. How it is connecting from old balance sheet to the revaluation account next to the new balance sheet. Pause the video and note down the question. Let us start solution. Solution to concept number 9. Revaluation account. Debit side, credit side. Debit side expenses and losses, amount rupees. Credit side revenue, that is income, profit, gain, amount rupees. So instead of this, you can write particulars on both the side. Now in our question, PDD is decreased. So increase in the PDD, you should write on the debit side of the revaluation account. If there is a decrease in the PDD, you should write on the credit side of the revaluation account. If you want to apply the rules of debit and credit as per the American accounting system or an accounting equation approach, decrease in the PDD. PDD is a liability. Decrease in the liability, debit. Because of decrease in the liability, another effect is increase in the revenue. When provision decreases, income increases. Increase in the revenue, credit. So the journal entry is PDD account debit to revaluation account. PDD account debit to revaluation account. If you want to apply the England system accounting or British system of accounting rules of debit and credit, PDD is a personal account, revaluation account is a nominal account. When there is a decrease in the PDD, the provision decreases, that much of the amount goes to the partners. That provision decrease in the PDD added to the incomes. So that's why PDD is a personal account, debit the receiver. Another effect is because decrease in the PDD is income to the partnership firm, credit the incomes and gains. The journal entry is that PDD account debit to revaluation account. So when you read it, now we are preparing the revaluation account. In our journal entry, revaluation account is credited. That's why revaluation account is created by PDD. So it is given that decrease the PDD decreased by rupees 200. This is step number 1. Let us start step number 2. New balance sheet of Messrs. Mrs. Mr. A, Mr. B and Mr. C as at 1/4/2024. Draw the format like this. Capital and liabilities, amount rupees, assets, amount rupees. Pause the video and draw the format. Ready? Capital, Mr. A, Mr. B and Mr. C. Earlier there were two partners, Mr. A and Mr. B. After admission of the new partner C, now there are three partners, Mr. A, Mr. B and Mr. C. Debtors, open the question from the old balance sheet 20,000. Less PDD, old PDD minus decrease. Old PDD is given in the old balance sheet 1,000 minus decrease in the PDD is from the revaluation account. Check it like this. So 1,000 minus 200 is 800. So out of the 20,000 we have a doubt to the extent of rupees 800. Net amount may be 19,200. Okay. So this is the concept number 9. I think everybody understanding it. If you look, it is a speed. You can reduce the speed and pause the video. Okay. If these videos are helpful to you, you like it, subscribe it, share it and press the bell icon. Dear student, these PDD concepts are common for the PUC, CBSE, ISC, CA Foundation, CMA Foundation. Okay, and we are shortly going to start the CA and CMA Foundation, account and other subjects also. So this is we have two channels. One is Bhagyavadi Commerce Foundation, where I am explaining in Kannada and English. This is Concept 60 Plus. Here I am explaining only in English. So you can watch both the channels. Subscribe in both the channel. So in the comment box, write your name, your college name and city. If you have a doubt, you may post the question in the comment. I'll answer the questions. Thank you.